when it is being visible. So I think the visibility is coming out from documentation. So the way the whole structure has been devised, we are divided into 4 separate days. Every day it is a session of 3 hours, and we have 2 topics, 2 faculties on each day. So today we are having essay number 200210, that is on audit engagement, thereafter documentation, then audit planning, materiality planning, quality control, fraud responsibilities, audit evidence and reporting. So the session has been divided in such a fashion that we are trying to cover all different facets of standard auditing, and with the focus on the practical aspects, because it's difficult to really cover everything 12 hours. It may require 12 days to really delve upon every topics. But however, the objective is to focus and touch upon the important topics with practical issues. Today, we are having 2 eminent personalities with us, Shriniwas Joshi ji and Sandeep Shah. And for first session, we are having faculty C.A. Shriniwas Joshi. To introduce him, he is, as I mentioned, he's a past CCM for 2 terms, and his contribution to ICAI profession by way of regional council and council is more than 15 years. He was a chairman of WIRC of ICAI in 2011-12, regional council for 3 terms and CCM for 2 terms, partner in CVK and Associates, in practice over 40 years of rich experience. And the responsibility which has all taken is to include the chairman of FRRB, chairman of PDC committee, chairman of corporate law and corporate governance committee, convener union directorate, vice chairman of auditing assurance board, audit committee, center for audit quality. And there are many things which he has shared. And along with the institute, he is also active in various other bodies, which includes mutual fund and CB related. Plus, he has been also the president of Rotary Club of Mumbai Mulund East in for last year for year 2013. So, with this brief word, I present before us all of you is the very important dignitaries, the faculty of today's first session, C. Shriniwas Joshi ji. I request Shriniwas ji sir to please take it ahead. Sir, you're in mute.
Thank you, Chintan bhai, and good afternoon to all. Murtuza Kachwala, our beloved chairman of WIRC, Chintan Patel, regional council member and head of the committee handling this particular sessions on essays, standard on auditing. Very learned faculty, Sandeep Shah. I would request all of you to put all the questions to him for the whole 4 days. Because he is one of the finest person in audit in the profession, and I think all your questions can be answered on the first day itself. If he decides, instead of giving lecture, Murtuza bhai should have given him the task of only answering questions. That would have been far better service to the profession. Next time, Murtuza bhai, remember that. So coming to this particular topic today allotted to me, even though we are few, including Sandeep bhai, we have few who speak, and Chintan Patel, we are few who speak on auditing standards. Many speak on various topics, but auditing standard is something very difficult to deliver. The reason is everybody feels that I know audit. I have done chartered accountancy, 3 years of articleship, and thereafter so many audits I have conducted. Nothing can go wrong when I audit, is the major issue with the audit. And therefore, I don't need to read again what I read in the when I did my CA. Friends, I would like to tell you that what Chintan bhai is doing is a great service to all of us. As just before seminar, we were discussing the start of this seminar, we were discussing that this, giving a lecture on any essay requires you to read it thoroughly many times. And that gives you, new perspective every time you read an essay, to say that, yes, I was missing something when I did something in the past, and now I'll take care next time. This is the feeling all of you will get when you have these 8 sessions done, and you will always ask for more and more sessions. I'm very sure from Chintan ji that we need, not only because the CP requirement is to do the auditing standard, but to gain the knowledge or to refresh ourselves and be a better auditor. Every time we listen to this, we'll be definitely the better chartered accountant or the person who can be depended upon. So with this background, let us start with two essays. One is essay 200, which talks of overall objectives of the independent auditor and conduct of audit in accordance with the standards on auditing. So it gives us a background as to for all other essays to be followed. This is a basic standard. Essay 200 gives so many concepts to us in audit which we hardly follow in practice. Essay 200 and 210. So this we are starting with that. I'll try to share the screen and I hope we will get that. Yeah. I hope all of you can see it.
Yes, it is visible.
Yeah, I think the right hand side, this can be deleted if I can see only a part of it. Okay. So now with this thing in mind, let us go to the first part. Friends, why audit is done? Friends, audit is done to enhance the degree of confidence in the accounts that are given to the users. So when the management presents something, there is a doubt in the minds of the readers or the users of financial statement, including banks, investors, creditors, and everybody who is interested in that company, to see whether the management is really giving a rosy picture or giving a right picture. So to give that degree of confidence that everything is what is presented is right, the audit is done. So we talked, chairman said about the trust, and Chintanji said about the trust in audit and trust in the auditor. That is why we as chartered accountants are trusted to give that degree of confidence on the accounts that are presented by the management or various businesses to the users, including banks who depend heavily on chartered accountants' audited certificates to advance the finance, to give finance. Now coming to this, to get this purpose, what auditor is doing? Auditor is trying to give an opinion on the financial statement, overall financial statement. This is an opinion on overall financial statement, whether it is giving true and fair view. Not true and correct view, true and fair view, because we are not on a particular type of, what type of assurance I'm giving. There are three kinds of assurances, you are aware. We are not giving absolute assurance. Absolute assurance is true and correct. We are giving reasonable assurance, which is true and fair. And therefore, when there is a limited assurance. You are aware, this is a limited assurance says this is not audited, but I have reviewed it. So we are giving a fairly high level of assurance, saying that the accounts that are presented give true and fair view of either the assets and liabilities, or true and fair view of profit, or true and or loss, or true and fair view relating to the cash flow statement, and so on. So this is what we do to give that degree of confidence. And to do that, what the standards of auditing is doing is that audit, if it is conducted in accordance with standard of auditing, will enable the auditor to give that opinion on true and fair. That is why all of us are here, to understand and read that. So the purpose requires opinion, and opinion can be given, a right opinion can be given if you follow the essays. As a basis, as a basis of auditor's opinion, we have the essays which require the obtain reasonable assurance about what? Reasonable assurance about the various things that we see in audit, and thereafter we give that reasonable assurance. What is the reasonable assurance is all about? That the statements, financial statements, are free from material misstatement. Now friends, material misstatement is a technical term. Material misstatement is that there are no errors. There are no errors, or there are no wrong statements, there are no errors, and this is properly presented as per the accounting framework. So this is where we are saying that this is the purpose for which we are giving a reasonable assurance to say this. Now, audit, how the auditor says this, how he gives this opinion, that is based because he has to get the evidence. He gets the evidence, then tries to get as much evidence as possible to reduce the audit risk to the minimum. And once he does that, from that audit evidence, he forms an opinion that whether the accounts are true and fair. Now, in spite of all this, the evidence that he collects can never be conclusive. It is a persuasive evidence and it's not a conclusive evidence. We will come to this, why it is persuasive and not conclusive. But because of that, there is a serious limitation on the audit evidence that is obtained. And because of that, there are limitations on this opinion to be depended upon. So this is how the SA 200 develops and tells us about several things. We'll come to that. Friends, one of the things SA 200 talks of is a concept of materiality. Concept of materiality will have to be applied by the auditor at several stages of audit. One is planning. When he's planning any audit, he has to decide either the account wise or the balance in the balances.
Sir, sorry, sir.
Yes, sir.
Just to inform to everyone that please, there is no need to write down a membership number because it will be like disturbing to faculty and all of the participants. You already have entered your membership number when you registered, so that is already available with WIRC. So kindly do not write membership number, or else we have to block chat, so others are not being disturbed.
Okay, so they can just log in on the link given. Beyond that, nothing is to be done, right?
Yeah, so they already log in through link, and that link
that's all.
Have membership number, so nothing to be done. Just
log in. Yes.
Yeah.
Right, this is the instruction for all 4 days, I believe.
Yeah, for all participants. For all participants, they're writing chat box, and I think it may be like disturbing every other participant and viewers.
Right. Okay. So here I was talking that there is a concept of materiality which is discussed in SA 200. The concept of materiality is required first at planning stage. At the time of planning, you decide which balances are material for audit, which of the transactions are material for audit. So and therefore you decide what is to be audited, how it is to be audited. That is number one. Number two, when performing the audit also, you may come across the materiality can change. For example, it can be you can decide to check more if you feel that you are not satisfied with the level of confidence that you don't have required by you, and you need to check more, or you can check less depending upon the when performing the audit, whatever are the results, you can change your materiality. And also it is required a time of evaluating the effect of various misstatement, identified misstatement, and where they are, it is likely that some misstatements are not identified. While evaluating that also, the concept of materiality will have to be thought of. And there are some misstatement, that is, there are some errors which are found, but they are not corrected. You are aware that suppose there are errors in petty cash book for classification of a particular transaction. For example, a photocopy can be debited to one Xerox account. It can be debited to other expenses account. It can be debited. Some of them are debiting even to the printing and stationery account. Now, you are saying that during the year, the same expense is debited to 3 different accounts, but it can go uncorrected because it is not material to the overall financial state, understanding the financial statement or profits or the assets and liabilities. So the uncorrected misstatement also need to be evaluated. For that, the concept of materiality is important in audit. Coming to the overall objectives of the audit. I think I am getting some overall objectives of the auditor. What he is supposed to do. This is the crux of SA 200. First of all, he is trying to obtain a reasonable assurance about the statement as a whole. Again, I'm saying he is not certifying itemize everything is right. He is saying statement as a whole do not have a material misstatement. And secondly, he is trying to see that whether the financial statements are prepared according to the framework selected. So for example, if in case of a proprietor, you are going on a cash basis of accounting, another basis you are in company, you are having an accrual basis of accounting, whatever framework you decide, You are saying whether the financial statements are based on that framework. This is the second objective, that when he is auditing, first he is trying to get a reasonable assurance that there is no misstatement, material misstatement as a whole for accounts as a whole. Secondly, he is saying whether the framework is properly in place. And third thing that he is saying, that what then he is thinking that what is his objective is to give a correct report. To write a report, we have SA 700, 705, 706 to guide us how to write a report. So you know how to go about reporting, and his objective of audit is to give a report and communicate with those who need to be communicated about the findings of his audit. Now the scope of audit will have this auditor's opinion when he has to give it. The essay gives a very important statement. The important statement, and it is now included in SA 700, the standard audit report. If you see that the statement is that the future viability of the entity is not ensured, first of all, means that except, of course, when we are supposed to comment whether, in our opinion, this entity is viable for the next 12 months from the date of the financial statements. Except for that, the future viability of the entity is not guaranteed because there is an audit properly done by us. Secondly, the efficiency with which the management is conducting the operations and management effectiveness in conducting the said operations, we are not certifying as right unless the law requires us to certify. For example, under section 143(3) of the Companies Act, we need to give the adequacy and operating effectiveness of internal financial controls. So this is actually the work of the management, but we certify that the internal financial controls are adequate and operating effectively as far as the compilation of account statements is concerned. So to that extent, we may be forced by a particular law or regulation to give us that particular statement, but otherwise the efficiency of the management in conducting the operations or their effectiveness in dealing with the situation is not certified by us, nor we assure that the entity is viable just because in the past the things were good. Now, also we are saying that in some cases the applicable laws, as I said, that it may require you to do this. Coming to the next part of preparation of the financial statement. Now, to prepare the financial statement as per the framework, the auditor needs some assistance from the management. And the SA 200 says that the management is responsible to provide the auditor with all the information. What is the information? All the records and documentation which they have used in preparation and presentation of financial statements. So first thing that the auditor needs a help from the management to get all the information which they have used, the records and documentation which they have used in preparation of financial statements. Secondly, what he needs is that any additional information he may need when he looks at this, he thinks that this is insufficient to take a decision whether the accounts give true and fair view. So he's asking additional information, and he should be supported by management to get that additional information. And third is he should have unrestricted access to those within the entity from whom the auditor determines it is necessary to get the evidence. So management should not restrict us from speaking to anyone or interacting with anyone in the organization, and even sometimes outside the organization. Will come to that, but that there should be unrestricted access to those people who know the things according to the auditor, and then auditor can have a direct access to them. So they cannot be shielded by the management saying you don't go to auditor directly saying anything, or he shouldn't ask you anything. So these are the three basic things that for preparation of financial statements and checking those financial statements, the auditor would need the assistance. you are aware that in case of listed company, there are a lot of responsibilities put up on the from the management while preparing the financial statements, that they have to have the application of accounting standards appropriately done. Now, accounting standards have been approved under Companies Act. Now, selection of accounting policies are to be done. We always have the schedule on accounting policies selected by the management, and whether it is consistently applied over the years or not, and whatever are so there are multiple choices, you are aware, in accounting policies, and those accounting policies, the choices have to be judiciously done by the management. This is one of the responsibility. Making appropriate judgments. For example, judgment can be on government debtors. Government debtors are always record 95% first and maximum up to 98%. Last 2% never comes. This is and so they account for only 98% revenue, unless by God's grace they get balanced 2%. So this is a judgment as to what is the recoverability of a particular debtor. About the estimates that the management has to do, that their estimates are reasonable and prudent. Now, estimates, for example, gratuity provision required so many estimates. What will be the rate at which the salaries would go up in future? What is the, there are several assumptions. I need not go through all. Many of you know what kind of assumptions are made by the actuary, and those assumptions are provided and data is provided by the management. Even assumptions are discussed by the management. So these estimates, when they are doing, they should be reasonable, which should finally result into giving true and fair view of the state of affairs. So this is where the company law says that this is a responsibility of directors, taking proper and sufficient care of maintenance of accounts. Now, what is the adequate accounts maintenance? Adequate if it is safeguarding the assets of the company and the accounts are maintained in such a manner that frauds or irregularities can be detected or prevented. So both if these two things are done by maintenance of account, then only they are appropriate. Preparing annual accounts on going concern basis. This is basic responsibility of the management to say that these accounts are prepared on going concern basis. So going concern basis is first to be tested by the management and thereafter by the auditor. Devising proper system to ensure compliance with provision of applicable laws. So obviously for example, all payments, government payments are properly done in time, or returns go in time. All these compliances for provision of applicable laws. And not only that, they have to put the system in place, but they have to see that it is adequately in operation and it is operating effectively. This is what is expected of the management. Now, financial reporting, financial statement which are prepared as per framework. There are two kinds of frameworks that you can have. One is general purpose financial statements, which are where the information needs of wide range of users is taken care of. And there are something called special purpose financial statements, which are financial statements for the need of specific users. There are other two types also. The financial reporting frameworks are either fair representation framework, which we normally use as true and fair, or while others can be compliance framework, saying that whether the laws and regulations have been complied or not. Now, if the applicable financial framework states how how the disclosure need to be made, then that disclosure also is included as a part of the financial statement framework. Now, coming to the other part, say SA 800 deals with special considerations when the financial statement are prepared according to special purpose framework. If this is not a part of this particular series, then you can read it, what is a special purpose framework and how to deal with such a thing. Now auditor, because of this significant premises to conduct the audit, it is required to obtain from the management two things. Now, two preconditions are there to accept the audit. Now, one precondition is that the management acknowledges and understands its responsibilities. So management has to confirm to the auditor that we have understood all those responsibilities we saw in the previous slides, and we accept that we will be complying with those responsibilities. And second is that they would give us the written representation that they have actually fulfilled these responsibilities in various parts. So and we state this in essay 210, which we'll deal with later, that we have the audit engagement letter, which states that this has been done by the management, both the things. So this is an agreement with the management, which is required to be taken by the auditor. Now, most of the frameworks for preparation would have will include the presentation. I also say there is a code of ethics. Many of you, even at the time of passing exam, right from thereafter, we have heard about this code of ethics, a new code of ethics introduced by ICAI in 2019. After 2009, it was revised after 10 years. Now we are with the international standards. And there are several fundamental principles that are given there in this code of ethics in conducting the audit of financial statement. And the code also tells us the framework for applying these principles in actual practice. And there are 5 principles you are aware of in the code of ethics about the integrity of the auditor, the objectivity with which he should work, he should have what kind of professional competence, how much care he has to take, what is a due care, how much confidentiality he should maintain the confidentiality of the documents and the information that he gets, and what is the right kind of professional behavior. Everything is given in the code of ethics. If you see, there are 2 other things we need to look at. SQC1 is called a mother standard. SQC1 is standard on quality control. Everybody says that I do a quality work, but I don't know how many of you know the difference between SQC1 and SA220. SA220 sets out what is the responsibility of the engagement partner in a particular organization, in a particular firm. And SQC1 sets out the responsibility at the firm level to establish the policies to see that all these ethical standards are complied with, including the independence of those who are actually working on the audit. Now, coming to the next part of this particular presentation. So we are talking of professional skepticism. Professional skepticism, friends, is the term defined in the SA 200, and it's extremely important term. And this particular term says that it is an attitude. What is a professional skepticism? It is an attitude. Attitude that includes questioning mind. First of all, you have to first say that what I see may or may not be right is a questioning mind. Not that you are suspicious in every case, but you have a questioning mind. Is it right? Is it logical? What I'm getting the information is what is the professional skepticism we mean by. So we have a questioning mind that whether it is logical to accept that. For example, you are known of a fraud that in an insurance company was asked to go pay a claim, and then in the investigation they found the number of TV sets that could have been accommodated in that godown were far fewer than what was claimed was there present in that godown when fire occurred. So this is, the auditor must have a questioning mind. Can say 10,000 TV sets can be placed in this particular godown? Is it possible? This type of questioning mind. He says it may be right, may not be right. So this is the questioning mind. Second is being alert to the possible misstatements. So you are alert that every time suppose related party information has come, you are aware that this can be misstated and how it can be misstated. And there are auditing standard on that. We'll talk on that. But you are aware or alert that there can be a misstatement, there can be an error due to fraud, or it can be an erroneous statement or a fraudulent statement. And also you need a professional skepticism is an attitude to critically check the evidence that is obtained by you. So if you are getting that evidence has to be properly assessed. There can be one of the finest audit done, but if the evidence is not properly assessed, the result or the report can go substantially wrong. So the professional skepticism is an extremely important concept in auditing, which is stated in SA 200, saying that you need a questioning mind. First of all, you should alert that there can be errors or possible misstatements in the given financial statement. And third is, I must do the critical assessment of the evidence that I got. Now coming to the next part, professional skepticism, what it includes. Now it includes the, pressures includes being alert to. Now what I am alert to? I said I should have a question. I should be alert to the possible misstatement. I must be alert to the audit evidence that contradicts the audit evidence already obtained. So what I did, I have continuously doing audit for a long period. I have assimilated the audit evidence, but the latest audit evidence I got is not in sync with what I got in the past. First, alert. So I should be alert to contradictory audit evidences. And this is an important part of my audit. Second is I got information which brings into question either the responses given by the management or its employees to my queries, or to the document submitted by. So I got some information which indicates that there is a possibility that the document is unreliable or the information received by me is unreliable. So I am being alert to that, and how we deal with it is given in subsequent paragraphs. Now coming to that, the conditions that may be saying that there can be indication of a fraud. You are aware that section 143.12 even talks of suspicion of fraud. And if the auditor suspects that the fraud is happening or has happened or is continued to being happened, so this particular case, your questioning mind or your professional skepticism will come to your rescue and say, yes, there is an indication of possible fraud and you need to report. Now coming to the circumstances that suggest a need for audit procedures in addition to those required by essays. So essays may give you some guidance, but you may require some additional audit procedure. For example, if essay 501 says how to audit when say stock, when you are not able to do it at the end of the year, but you can have your own additional audit procedures to find out beyond what essay 501 says to get your confirmation. So this is the professional skepticism. Now coming to this, maintaining professional skepticism, we obviously has to be done throughout the audit. So it is not a one-time exercise either at the time of planning or a time of checking the evidence. Throughout the audit, I need to be alert to several things. We saw what alert to, but now once I do that, it will reduce the risk. What are the risks which are reduced if I have a professional skepticism is, it will reduce the risk of overlooking unusual circumstances. For example, if there are contradictory evidence, this is very unusual. This is very unusual to get contradictory evidence in major events or transactions. And if you get that, if you are doing this maintaining professional skepticism, you will not overlook these circumstances. Over generalizing in drawing conclusions. For example, if your conditions indicate possible fraud, and there are small errors or frauds, and you feel that nothing will happen, you are generalizing, saying there's nothing to worry, this is all recovered, all frauds have been recovered, all people who were caught have paid off all the money. So you are overgeneralizing. Now accounts seem to be fair and proper. This kind of overgeneralization of drawing conclusions or observation can be avoided if you have this. It will reduce the risk of doing this if you have a professional skepticism. Now, using inappropriate assumptions. Now, what is the inappropriate assumptions that you are using? For example, you have the information which you got, the reliability of the document, or the, as we say, the inquiries that we made, response we got to the inquiries is found to be not right, not reliable. In that case, I am using the inappropriate assumption that the information on which I am saying is right, and accordingly I have accepted those responses. It is not right. So I must change the nature, timing, and extent of audit procedures for evaluating the results. Now, this term is used continuously in auditing standard. Nature, timing, and extent of audit procedures. We should know what it means. The nature is what you do. Timing is when you do. And extent is how much you do. So nature, timing, and extent of audit procedures in evaluating the results, these things would be, this will reduce the audit risk by doing this. Now coming to this, the auditor may accept, there is a very major statement made in SA 200. This can be used at various places, but with a caution. That SA 200 also gives a caution. The SA 200 says the auditor may accept the records and document as genuine unless he has reason to believe the otherwise. Now, this is the basic statement. That means I go with a questioning mind, but not with a suspicious mind. There is a very thin line in this, and this is a very major statement. But it also therefore says, nevertheless, the auditor is required to consider reliability of the information received as an audit, received as an evidence. So you cannot say that because I accept the records as genuine, I have not gone into the reliability of the information. That is not acceptable, and therefore the auditor must see the possible indications of the fraud. And auditor, if he finds that, the essay requires us to investigate further, and we need to modify our audit procedures necessary to resolve the issues. And now, another thing that is very important that is said about the management is, many times we deal with the management for a number of years and we feel it is very honest management. You know, they have proved their honesty. There are you know, in our country, we have many family-owned concerns. Some of the family-owned concerns are known for that honesty and integrity, in the widely known in public. Now, the auditing standard SA 200 says that the belief that management are honest and have integrity, that is good. I mean, you can have that belief, but it doesn't relieve you as an auditor to maintain the professional skepticism and be satisfied with less than persuasive audit evidence. These two things just are not acceptable, even though you feel management is very particular, honest, and have high level of integrity. This cannot be, you cannot escape this and do the audit in a shabby manner. It is not allowed. That is what it says. One of the other things that is said here is about the professional judgment. Now, friends, the professional judgment is something which is absolutely necessary in proper conduct of the audit. Now, why professional judgment is necessary? That there are several requirements, you know, that there are many highly experienced auditors. You are aware that many of the auditors, I also mentioned a name before you, that these auditors are having very high level of knowledge and experience on audit. But this high level of experience and knowledge need to be applied to the given facts and circumstances by the auditor, and he has to take the informed decision at various times during the audit. Now, these decisions are required on what? The decisions are required. One is on professional judgment is required for finding out what is the materiality, either at the balance level, either at transaction level, assertions level. Now, you have to also see your professional judgment, what is the audit risk, and to reduce the audit risk, what you need to do. Again, nature, timing, and extent of procedure we talk, that needs to be decided based on professional judgment by a person having relevant knowledge and experience, and he uses that. Now, evaluating whether sufficient appropriate audit evidence is there on the file before the decision to give a report, which is, we call it clean, that is unmodified report in technical terms. So when we give that, to evaluate whether sufficient evidence is available in my file to give such an opinion, or when I qualify opinion, whether there is sufficient material on my file to qualify that, is something of a professional judgment that I need to do. Evaluation of the management judgment in applying the financial reporting framework is also requires the professional judgment. Drawing conclusions, obviously, based on reasonableness of estimates made by the management, would need such a judgment. Now, actually the audit, if you see the correct statement, what is audit documentation, or based on which auditor is taking this professional judgment, and there is a very important statement made in SA 200 that the auditor is required to prepare audit documentation sufficient to enable an experienced auditor having no previous connection with audit to understand the significant professional judgment made in reaching conclusion on significant matters arising during the audit. That means there is a person who is very well versed in audit, but he was never on this audit. He has never done this work. He takes your file, he takes your evidence that you have collected. Then he tries to understand how you have taken, how you have reached your conclusion, whether you have used your professional judgment in reaching the conclusion, what kind of evidence you have in record, and for all significant matters, all the significant matters, what decision you have taken, how professional judgment you have used in reaching a conclusion, and whether the documentation is sufficient to prove what you have taken the judgment. If a third party, a person who is very well versed in audit but was never on this audit, from the documentation, if we can say that this is right, then that is the right documentation. This is a very important statement done in SA 200. Friends, there is a term you always listen to, is sufficiency and appropriateness of audit evidence. Now, friends, sufficiency and appropriateness of audit evidence, or sometimes it is called sufficient appropriate audit evidence. Now, audit evidence is necessary to support the opinion of the auditor. Obviously, the without audit evidence, you cannot give any opinion or cannot give any report. Now it is obtained from where? It is first, audit evidence is obtained from procedure of audit, right? Fine. It also includes the information which auditor has from his previous audit. Previous audit, he knows that so many things can go wrong or so many things are right. So those evidences he has with him, past evidences, will help him in having the current report also. Not that he has to copy, but he has that some information of the past about the client. Then other sources, inside, outside, entities, accounting record obviously will give him that evidence which can be prepared by some of the expert. Like I said, that judgment and estimates are to be done. Estimate on gratuity, we depend on outside expert. Then, one of the things that is stated in the SA 200 is absence of information is also an evidence. Now, this is very, very critical. Absence of any information. You have asked for something which is not received by you, either by you or even by the management, doesn't know answer to some of the queries that you are making. This itself is an evidence to you to decide on a particular way you will report. This is very important. And one more thing that is important is audit evidence is both. It comprises of both the information that supports the management assertions and information that supports and corroborate, or information that contradicts such a thing. So both are audit evidences where they support and corroborate the assertions, and there's some of the evidences which contradicts such assertions. Now, one thing we should understand about sufficiency and appropriateness of audit evidence, they are all interrelated. Sufficiency means quantity of audit evidence. In case of small entities, we have several accounting errors done by the accountant who is just a graduate. So what we do, to have a sufficient audit evidence, we do 100% audit many times to see that I check each and every transaction. So sufficiency relates to quantity of audit evidence, but it is always linked with quality of audit evidence. So obtaining just more audit evidence does not compensate for poor quality that the evidence may have. So just you have everything checked does not mean the audit is properly done. Now, what is an appropriate audit evidence? Appropriateness is the measure of quality of audit evidence. Means, what is the quality? That information is appropriate if it is relevant to the financial statement preparation, and it is reliable. If information is relevant and reliable, then it is appropriate. So reliability, and obviously the reliability is influenced by source. More the outside source, it is more reliable than internal source. And written representations are better than oral, and so many things you are aware about the reliability of the evidence. Then whether sufficient appropriate audit evidence is available to you to reduce the risk of audit is itself a professional judgment. So it's a part of the chapter on professional judgment there to say whether this is acceptable. Now, audit risk. The SA 200 talks of audit risk, and audit risk is a function of a risk of material misstatement and a detection risk. Now, there are two parts in the audit risk. The audit risk is dependent on two parts. One is a material misstatements, and second is whether I can detect this. What is the detection risk? That is the risk of not detecting these material misstatements. There are two parts. Now, audit risk what is the risk of material misstatement? Now let us concentrate on first part. What is a material misstatement? It may again exist at two levels. One is the overall statement level, overall financial statement level. If it can pervasively give a wrong result, overall, or it can be at assertion level. That is, a particular transaction can be materially misstated, or an account balance, particular balance is misstated, or particular disclosure is wrong or erroneously done. So those are the two levels. One is at financial statement level, one is at individual assertions level. Now, assertion level consists of, again, two components. Overall financial level, you are aware. But what is the assertion level, that classes of transaction or account balances or disclosure level? There are, again, two components. One is there is an inherent risk in the business, and there is another is a control risk of a business. And they always exist, whether you do audit or not. Now, coming to this inherent risk, the technological development, and because of that, there's the inventory becoming obsolete, and the inventory is therefore overstated. The obsolete inventory is shown as at full value, is an inherent risk of a business. Lack of sufficient working capital is an inherent risk in the business, which can result into material misstatements in the account. Now, what is if you see the risk of material misstatement here? Now, coming to the internal controls, the control risk, friends, control risk has several issues. Control risk is the effectiveness of internal control. Talks of control risk, talks of effectiveness of internal control. Now, internal control, how best you design, can only reduce the risk, but it can never be eliminated. The whole risk of audit, risk of material misstatement cannot be eliminated with best of the internal control. Why? Because there are inherent limitations on internal controls. And one of them, there are several of them, but inherent limitation is there can be human errors in applying those controls. There can be mistakes. There can be collusion or inappropriate management override. So there can be several things why the controls may not work, and SS say that you have no choice but to test the operating effectiveness of the control and determine your nature, timing, and extent of substantive procedures to be performed at various levels. Now, detection risk obviously relates to the nature, timing, and extent of procedures that you follow. And you want to reduce the audit risk, you need to have this nature, timing, extent properly determined. And therefore, the detection risk depends on how these audit procedures are set or designed and how they are applied. Now, coming to that, what you should do to have the detection risk, the audit risk at a very low level and detection is at high level. You have first adequate planning. Then you have proper assignment of personnel, that is the right kind of people are placed for right kind of work that is there. Then application of professional skepticism throughout the audit, and we should supervise and review continuously the result of the audit, that is the findings of the audit. If all the four are done, it will assist the auditor in having the effective audit procedures, and it will reduce the possibility that of a error or a fraud. And auditor, now this will also reduce if you have proper planning, proper assignment of personnel, application of professional skepticism, and you continuously review and supervise your work. There is less chance that first is that you select the wrong audit procedure. Second is you misapply the right procedure because application was wrong, or the interpretation of the result when the designing of the audit procedure was right, it was properly applied, but it was not properly interpreted. All these can be omitted if you have this kind of proper planning done. Now, obviously, SA 300 and 330 tells us about the planning of the audit and assess risk. You are having a next speaker talking on that. And also, it can always, the detection which can always be reduced, but can never be eliminated. And you should have that accordingly. It will always exist. The detection risk exists. That means there's a risk that the material misstatement is not detected. Now, many there are inherent limitations of audit as well. Now, there are several judgments. There is a high degree of uncertainty in the business, and there are range of acceptable interpretations and judgments that are available to the management. And this in different circumstances, and just by additional audit procedures that are employed, this particular range of acceptable interpretation or judgment giving different result cannot be eliminated. The risk cannot be eliminated. For example, various accounting estimates can go wrong or can be deliberately tweaked. Now, essays require auditor to see that the estimates are reasonable, and they are then you give a specific consideration. Accounting estimates are reasonable. Then there is a qualitative aspects of entities accounting practices and indicators of possible bias. So he is supposed to see that whether doing this estimates and judgment, there is a bias by the management. Bias can be when you want to show higher or lower profit or losses for certain reasons. And to do that, whether there is an indication of the bias while doing this judgment is the auditor duty, is what SA 200 tells us. Now, coming to the nature of audit procedures, there are various limitations of audit. One of the limitation of audit is that the management may not give you the proper information or a complete information, either intentionally or unintentionally. So first is that in spite of performing all the procedures, auditor is not sure whether he got all the information. Completeness of information is one of the things you need to certify the accounts end to end fair. So completeness of information is dependent on management giving you the full information. Now, intentionally or unintentionally, it may not happen. Now, of course, fraud is obviously the reason why sometimes it is difficult to detect the intentional misstatement. Now, what is happening is there is a collusion or falsification of evidence, and you are believing on that evidence, saying that this is my audit evidence on which I am giving my opinion, but that itself is that it is tweaked or it is false, and therefore we believe it is true or it is valid. It is not valid, but the standard says that auditor is neither trained nor expected to be an expert in authentication of document. This is an important statement, and therefore, whether you have been shown, in Caro, we say that the title deeds are fine with me. I've seen all that, and that determination of the authentication of that is not with the auditor. An audit is not an investigation, and he doesn't have power to search. This is one of the major problems with the audit, and therefore he may not be able to get the right kind of audit evidence. So audit evidence is limited because first of all, the evidence may not come, full information may not come to you. Second is there can be fraud. Third, you are not official investigator. Now also it says that there should be balance between the cost and the benefit analysis of in the audit. You cannot, of course, say that I have a difficulty. I did not do the audit probably because my experienced staff left, because so-and-so was not available. There was exams, CA exams, all articles went on. Difficulty in doing the audit is no way protecting us to do what should be done. And we have not done it. Time. So I don't have time. I got this audit on 27th September and my tax audit report had to go within 2 days. This is time constraint, but I shouldn't accept that. Then the cost involved, I said that this is complete mess. To check that, I will have to incur much higher cost than the audit fee, and therefore I will not do it. This cannot be a valid basis for an auditor not to do a procedure where it has no alternative. So I am trying to cut corners and do alternative procedure, but there is no alternative. For example, checking of inventory. I don't have any alternative procedure except going there, checking of cash. Now I have no alternative but to do that, and I can't say I have difficulty, I have no time, or my cost is heavier in doing this, for example. So we have no alternative to conduct an audit procedure, or we have an evidence which is less persuasive. This is not acceptable as a matter of difficulty, time, and cost. but therefore as a balance need to be struck between the two to find out what is the right kind of cost and benefit analysis as far as the audit evidence is concerned. Now coming to the other matter about the inherent limitation of audit. Now, of course, similar problems are with internal controls also. The cost and benefit analysis is seen in internal controls. More the controls is better, but the cost may be not in exorbitant. Now, in case of certain assertions or in case of certain subject matters, the potential effect of inherent limitation and the auditors, there is a risk of materials misstatement being not detected. Now, here there are several essays that are given to us to have that inherent limitations and therefore an unavoidable risk of material misstatement in several cases. How to deal with such circumstances have been stated in several essays. For example, essay 240 talks of fraud, and in case of fraud or possible fraud, how we should approach, what should be our approach in audit. Essay 550 talks of related party relationships and how to check the related party relationship is stated there, or we have a help there. Essay 250 talks of non-compliance with laws and regulations, and this is how we can be benefited by looking at essay 250 to see whether laws and regulations are properly followed. And now essay 570 talks of entity being ceased to continue as a going concern. So essay 570 will help us to decide. So these are very difficult situations: frauds, related party relationship not properly shown, laws, regulations not followed, or entity may cease to operate being a going concern. Such type of difficulties have been addressed in various essays, and we need to look at those essays to do that. However, because of all this inherent limitation of the audit, the risk that some material misstatement will remain undetected has to be accepted by the auditor, auditee, and even those who are using the financial statements. And because we have less than persuasive audit evidence. This is what 200 says, friends. It was in nutshell what 200 said. In the limited time that we have, so that you can listen to much better speaker after me, let us quickly do the essay 210. Now, essay 210 is a standard which we hardly actually put in practice. Have we ever gone to the client and said that let us agree to the terms of my audit engagement? We have a habit of laughing at larger firms in this country because they do this. But once you read essay 210, you know why they did it. If you read SQC 1 or essay 220, you will see why you really do it and why it is required to be done, because it is stated in auditing standard. This has to be done with the reasoning why we have to do it. Now, the objective of the auditor is to accept an audit engagement only if the objective of the auditor is to accept the audit engagement or to continue with the existing audit engagement. Both. You cannot say, I have accepted this 10 years back, 5 years back, last year, so I will continue. No. Either you have to accept a new assignment or continue with the assignment only if two things are present. One is whether precondition to audit are present. We'll come in the next slide. What are the preconditions to audit? And secondly, confirming that what the auditee and auditor understand, they have a common understanding as to what is this engagement is all about. So there is no heartburn after the audit is done as to what was expected by the auditee is not given, or auditor says I have given more than what I should have given and still you are not satisfied. So that will not happen if the terms of audit engagement are very clear and confirmed that there is a common understanding of the result of what we are doing. So one is the preconditions of audit are present, and the result of the audit is there is a common understanding on what should be the result of the audit. If these two are present, then only we should accept the audit, otherwise not, is what essay 210 says. Now, what are the preconditions of audit? Now, precondition is first is determine whether the financial framework is acceptable. This is the first thing. So if financial framework is not acceptable, cash basis of accounting as far as the limited concern is limited companies are concerned, You say this is not acceptable, I will not accept the audit. You want most of the things are on cash basis, whether you say it is on accrual, but most of the major amounts in the profit and loss account are on cash basis, I will not accept. So major reporting financial framework is not acceptable to you, or financial reporting framework to be applied in preparation is not acceptable to you. That has to be accepted first before you accept the work or continue with the work. Obtain the agreement with management that they understand and acknowledge their responsibilities. And what are the responsibilities of the management? First, it is the responsibility of the management to prepare the accounts, final accounts, which give a true and fair view and which is free from material misstatement is their first responsibility. Second responsibility is that, the financial statements that there is an internal control that they would put in place so that there is no material misstatement. So that this is as per the framework. First of all, they will prepare the account which gives true and fair view. They will put the internal controls in such a in place that there is no material misstatement. They also have to provide the auditor with access to all the information which the management has used in records and document which they used in making a financial statement, any additional information that the auditor needs, and the unrestricted access to the persons who have such information which the auditor believes have such information. These, unless all the things are present, that is the acceptable framework is present, all the internal controls are in place which will give a true and fair financial statements, and the auditor is given free access to all the information, additional information that he wants, and the unrestricted access to persons. This is a precondition on which the audit can be done. Now, of course, the additional information also includes what is stated in 720 as other information. Now, coming to the agreement on the responsibilities of management, the concept of independence of audit requires the auditor role does not involve taking responsibility for preparation of the accounts. I mean, many of us violate that, but concept of independent audit, independent is a word. So the preparer cannot be a auditor, obviously. So it says that there is no responsibility of preparation of financial statement of the entity, and there is no responsibility on setting up internal controls. And the auditor is reasonably expected that he expects that the management will see this. Now, friends, SA 580 requires auditor to request the management for written representation. Now, even though 580 says, and there'll be a session on this, I hope, that there'll be that the written representation is first required to consider whether they have fulfilled the responsibilities. The management has fulfilled the responsibilities. For example, if there are several things where you will say the management declaration or management taking the responsibility of the figures on the financial statement, how the transactions are reported or balances are reported, is so much important on that written representation that you have no other audit evidence, almost no other evidence which you can get. If I was giving lecture on 580, I would have given you several instances, but just to understand a few instances why the written representations are so important for audit, and therefore the letter which I get from the management as appointment letter should say that they will give a written representation. They commit to give a written representation is important. Now see, for example, obsolete stock. What is obsolete? Mostly management will know. Projections for impairment of assets. Impairment of assets, is a market value or the future discounted cash flows. Now, this is done by the management. Provision for doubtful debts, whether debts are doubtful 5%, 10%, as I say in government, 5% or 2% or whatever. Provision for warranty. In sale, how much is the warranty contained? Is the management declaration. Disclosure of contingent liabilities. Some contingent liabilities may or may not be disclosed by the management. That's why the written representation is required, that representation is required, that all contingent liabilities have been disclosed. Date on which asset is ready for use. Friends, ready for use and put to use are different, and in accounts we use ready for use concept for stopping the interest capitalization. Now, when it is ready for use is management representation. Life of an asset, now that is required. Again, management can have its own representation on that. Subsequent events subsequent to balance sheet date, which have the impact on the financial statement also is a management responsibility. Intention to continue the lease after lease period. Now this affects the depreciation done on the assets. And there are several examples. I'll not give you all, but there are several things for which SFIAT says that management representation, written representation is required from the management relating to this. And where the management does not acknowledge its responsibility or agrees to provide a written representation, it is not sufficient, appropriate audit evidence in many cases. I listed few of them for you. I just said few of them for you, but otherwise it's so important for us to get that. Therefore, the management must acknowledge its responsibility and agree to provide written representation to the auditor. Now, there is a limitation on the scope prior to audit engagement sometimes. So when you are having, when a management imposes some limitation on the scope of auditor's work in terms of audit engagement, and the auditor believes that this limitation will automatically result in disclaiming an opinion. You know, there are SA 705 talks of qualified opinion. It talks of adverse opinion, which is not true and fair, and disclaimer of opinion. I do not know whether the accounts give true and fair. So the limitation placed by management is such that you are very sure at the start that I will not be able to certify the accounts as true and fair, or otherwise also that they are not true and fair. So I can neither give qualification nor say they are not true and fair. I will have to give a disclaimer. If this management's limitation of scope talk says that this is this you cannot do, or this you are not, this type of information not get, and you believe that you will have to disclaim the opinion, in that case you shall not accept the appointment as engagement unless the regulation or law requires you to accept that engagement. Any law requires you. Now, friends, about the recurring audits. On recurring audits, the auditor shall assess whether whether circumstances require the new engagement letter. You know, when there are recurring audits, you feel that I have an engagement letter, we'll discuss the contents of engagement letter. You will, I have given it once, now they know, and it's not required. So auditor has to assess whether the circumstances are right to give a fresh engagement letter, or we need a revision in the engagement letter which I have given in the past, even though say under company law I have 5-year appointment, but every year I have to think whether I need to revise the engagement letter, or whether there is a need to remind the entity of the existing terms of the audit engagement. Why there is a reminder, I'll come to that. And when you see when the auditor is required to give circumstances in which the terms of audit engagement have to be restated or renegotiated or re-signed, you see the circumstances. Now, the auditor may decide not to send the audit engagement letter. However, there can be various factors, as I say, that forces him to say that the terms of audit engagement need to be changed or revised, or need to be reminded to the management. See the circumstances, then you know. Any indication that entity has misunderstood the objective and scope. So last year when I did the audit, there was a lot of hue and cry that you did not do this, you did not. They say, for example, you did not do the GST reconciliation. Now there's a GST consultant who does it, and he has not given you, and there are errors you could not find, neither he has given, and they are. So what you got the management to say that we have done this reconciliation and it doesn't give error, and next year you get the errors. Now this guy, what was the expectation from the statutory auditor? Whether there is a separate, say, tax auditor, and tax auditor gave some opinion which were wrong. Now whether those opinion needed to be challenged by the statutory auditor, you decide whether there was misunderstanding in the objective and scope of audit with the auditee, and that if that needs to be stated properly, what is my role as a statutory auditor. So there you indicate what is the misunderstanding. You clear it off by giving an appropriate letter. Revise special terms of engagement, or recent changes in senior management or ownership changes. Obviously, significant a change in the ownership or change in the senior management would need this. Now, significant change in the nature and size of the entity's business would need a rethinking on the whole audit process. You would need to have a new letter. Change in the legal or regulatory requirements, change in the financial reporting framework, or changes in other reporting requirement may need the auditor to give a letter again. Now, request for change in the terms of auditing. Now, one question that comes, discussed in 210 is that there is a request from the entity to the auditor that your audit engagement should change. Now, it can change, not that it cannot change. First of all, a change in circumstances may be there in terms of audit engagement may result in the change, needing a change in the service. Second is the misunderstanding as to the nature of the audit. As we say, we need a request for change in the audit engagement terms, and also the restriction on the scope imposed by the management or caused by the circumstances may need the change in the audit engagement later. For example, your stock is in Iraq and there is a war going on. So maybe such circumstances, Ukraine, and then you need a audit engagement later to say that your subsidiary, when you are doing CFS, may not give the audited accounts, it will be unaudited because of the circumstances. So there is a change in what you are doing and what is your responsibility and how to do that. That is one. Then in contrast, a change is not considered reasonable. That is where the change was considered reasonable in this circumstance. But here it is not considered reasonable, where the change relates to information that is incorrect, incomplete, or otherwise satisfactory, and such information is not being given to avoid the qualified or disclaimer of opinion. So when there is a misinformation or information is incorrect, it is incomplete or not satisfactory, and the auditee says that I will impose a limitation on you not to check this because I don't want qualified opinion or disclaimer of opinion, such an engagement cannot be accepted. So there is no change acceptable to the auditor in such cases. Now the auditor shall not agree to the change of term when there is no reasonable justification for that. Now there are two things. One is prior to completing now you have started the audit, and prior to completing the auditing, first of all, you will not accept the audit in such cases. Secondly, prior to completing the audit, there is a request coming to you saying that you lower the level of assurance from absolute assurance to reasonable assurance, or reasonable assurance to limited assurance, and you don't feel there is any justification for doing this in continuing assignment, then it is unacceptable to you and you say no. If the terms of audit engagement are changed and management the auditor and management shall agree, and if they agree, they will have to record it in the new engagement letter. But if the auditor is unable to agree to such terms, then he should withdraw from the assignment. Number one, there are two things he can do when he's saying that I will not accept in a continuing engagement. I will not accept this limitation imposed by you. Suppose 60% of the sale is from Ahmedabad factory and you say you can't visit Ahmedabad factory. Your accounts will be available remotely. You cannot go and you need to go. You feel that there can be a lot of stock is not being sold. There is a 6 months inventory, 8 month inventory. I need to go see obsolete stock, slow moving stock. The valuation may substantially change the results. If I go there and management says no, such a case, you will withdraw from the audit assignment. I'm just giving example. And first is you have to withdraw from the assignment. Second is you have to decide whether you have an obligation to report the circumstances to those charged with governance, to the owners or to the regulators, whether there is an obligation, legal obligation on you to say why you are withdrawing from the assignment. You have to see that. Now, auditors report sometimes is prescribed by the regulations, the format of auditor report. So SA 210 says that first you have to check whether it is different from SA. SA 700, 705, 706 are mentioned. So you see that whether the laws and regulations, many times we give certificates to various government agencies, many times they call it so-called audit reports on some of the matters. And it is not as per SA's, requirement of SA's. Then you have to see two things. Whether the reading my audit report, there will be a misunderstanding on the assurance that I'm giving that to the reader. And secondly, can I give, if it is so, if there is a misunderstanding, possibility of misunderstanding, whether additional explanation I can give and mitigate that misunderstanding. I have to look at that. And once I look at that, I conclude that additional explanation cannot mitigate the misunderstanding. I will not accept the assignment. So first at the assignment set, I must see that this format of audit report is not as per essay, and it will give a misunderstanding. Whatever explanation I give, the misunderstanding cannot be removed, and therefore I will say that I'll not accepting the audit assignment. And or if I have to conduct the assignment, the audit assignment, if it is conducted due to law and regulation, I will say that it is not conducted as per requirement of essay. I have to specifically state if I have to accept that. Now there are so the agreement on the audit engagement terms, I will not go through much in that. There's a whole list of things that there is, of course, a sample given at the appendix 1 as example of audit engagement letter. So just let us run through what is an audit engagement letter and what we have to look include in that, and you can refer to that format given in essay 210. The objective and scope of audit of the financial statement, what we stated in the in this lecture, we can state there what are my responsibilities as auditor, what is the responsibilities on the other side, that is of the management, and what is the applicable financial framework, what is the content and form of report that will be issued by us. Then whether law and regulation, sometimes the law and regulation specifies. For example, company law specifies section 143 what is the form in which the auditor's opinion should be. Then auditor need not record in writing the first part, that what will be the reporting format in which, but he has to see that management acknowledges and understands his responsibility about the account. That second part cannot be avoided. Now, form and content of the have elaborate scope of audit, applicable legislations, applicable regulations, essays, then essays, then ethics that will be used, form of any other communication, essay 701, that auditor will communicate key audit matters, and fact say that this is one of the major statement which has come also in 700, that the fact that because of the inherent limitation of audit together with inherent limitation of internal control, there is an unavoidable risk that some material misstatement may not be detected. And even though the audit is properly planned and performed in accordance with ACEs, this is a very important statement to be made in the audit engagement letter itself, so that the auditee knows the risk of material misstatement. I cannot be reduced, the detection risk cannot be reduced to zero. Arrangement regarding planning, how we plan and how we have decided to do the audit and perform it. Then expectation of the management, we expect that the management will provide a written representation. Then it also has to make available that auditor will be made available with draft financial statements. Management will inform the auditor that after the date of audit report to the date it is approved by the say AGM, anything that has happened which is very major. Then basis on which the fee is calculated, obviously, if it is based on any calculation needs to be saved. For example, the other charges or the expenses that you will charge them in addition to billing. Then the management will be at the end of the letter, management will be requested to acknowledge the receipt of this letter. And not only that, they will say we agree to the audit engagement terms. That means they agree to the responsibilities that they have. They acknowledge that they have the responsibilities as stated in that letter. And we also state that this audit process may be subjected to peer review. And therefore, I may need your help at a later date if peer reviewer wants some additional things from you. Now, engagement letter can also have some of the other things to be included in that arrangement concerning the involvement of other auditors. So it can involvement of other auditors or experts, so joint auditor, other auditors, previous auditors, if we want previous auditor, or restriction, or we have made with predecessor auditor, etc. Restriction on any liability, if it can be stated. I don't think in India we can state the restriction on our liability in the letter. The reference to any other further arrangements between auditor and the entity, and obligation to provide whether auditor is obliged to provide working paper to somebody. Say, for example, a component auditor, whether it should give it to the main auditor. It is not required in India, but if such a liability exists, then it will come in that later. Then audit of component, if the auditor of a parent entity is also the auditor of a component, in case he has to decide whether such engagement letter is required for that component, depending upon who appoints him, whether a separate audit report is required for the component, whether there is a legal requirement in relation to appointment, and degree of ownership, how much is the ownership of a parent in that entity, and what is the independence of that management as compared to, and how much is influence of this board on that, or the owner's ownership, etc. And all that will be considered while giving a separate audit engagement letter for a component. Thank you, friends, for listening to me for such a long time. And I hope you will be satisfied about the contents of this particular presentation. Thank you very much.
Thank you, Shriniwas sir, for sharing your insight. Now I request CA Renuka Deshpande to give the vote of thanks.
Thank you, sir. Thank you to CA Shriniwas Joshi sir for your guidance on Essay 200 and Essay 210. It will definitely helpful to our members in their audit assignments and preparing audit reports. Thank you so much.
Thank you.
Now we hereby move towards for the next topic for our refresher course. It is Essay 230, Audit Documentation, Essay 260 and Essay 265, Communication Deficiencies in Internal Control. And for that, we are having with us eminent speaker, CA Sandeep Shah. CA Sandeep Shah, who is managing partner of NE Shah Associates LLP, has over 38 years of experience encompassing the provision of assurance and corporate services to diverse range of industries. He is engaged with the Institute of Chartered Accountants of India in several capacities as member of Shield panel formed by Research Committee for ICAI Awards for Excellence in Financial Reporting, panel for Technical Reviewer formed by FRRB. In past, he has been associated as member of ICAI's Expert Advisory Committee, Accounting Standards Boards, Auditing and Assurance Standards Boards, in AS Implementation Committee, and many other groups. He is also committee member of Bombay Chartered Accountant Society's Accounting and Auditing and Corporate and Allied Laws. He is currently on the executive boards of not-for-profit organizations like National Burn Center, Somaiya Education Trust, Council for Fair Business Practice, Rotary, etc. So we are fortunate to have such experience and versatile personality for this session. May I request CA Sandeep Shah sir to kindly take charge of the session and guide us on Essay 230, 260 and 265. Thank you.
Thank you, Renuka, for that. Thank you, Renuka, for that introduction. Good evening, friends, and like every true professional, we saw that past council member CA Shriniwas Joshi managed to complete his part of the presentation well within the time given by him. I worked with him on multiple committees, and I can tell you that as a thorough professional, we have a lot to learn from Shriniwas Joshi sir. So what I have as a part of my topic presentation, as Renuka mentioned, was on the 230, 260 and 265. And I'll take around about an hour and 15 minutes, and hopefully we should be able to, if there are some questions, we should be able to take those questions as well. May I ask the moderator or someone to say that whether am I audible and is the screen visible?
Yes, sir. Audible and screen is also visible.
Okay. And my only one request is that sometimes the screens freezes. So in case we find that the screen is not moving, please,
Definitely. Definitely,
Thank
sir.
you.
Definitely. Thank you.
This evening we are taking the SA 230, which is the audit documentation, SA 260, which is communication with those charged with governance, SA 265, which is communicating deficiencies in internal control to those charged with governance and management. Well, our earlier speaker, learned speaker, did mention about the various authorities, and so did the chairman of the session. Also mentioned that there are multiple regulators. Institute obviously right from day one has always been advocating and canvassing that the quality of the audit, the work done by the professionals has to be of the highest order. But nonetheless, we see every day that there are increasingly, and because of the level and complexity of work and the importance of our work. See, if your work was not important, I don't think anybody would be even interested in knowing what we are doing. The fact of the matter is that as professionals, we are, in the important aspect of the financial space in the entire ecosystem. You can see that, between the institute, the quality review board, the peer review, the NAFRA, the the SFIO and SEBI and the other regulators, everybody is looking at your piece of work which you are doing and which is finally communicated by way of an auditor's report. So as we say that there may be ease of doing business, but certainly not the ease of audit, particularly if you don't have your steps right, in which event the audit obviously does not come very easily. And it's a very just to start the context. We say that success isn't guaranteed, but failure is certain if you aren't truly committed towards your work. And when we are talking about our audit work, it is so important that all of us wants to be a successful professional, and particularly since our whole next 4 days are in relation to the standards on auditing, I'll restrict myself to being a success as an audit professional. So to be an audit profession, our work should pass all the tests of scrutiny, undoubtedly. But does it happen automatically? Will it happen only by the signing partner knowing everything? And why are they called standards? Because there is uniformity of approach. And finally, unless there is evidence, there is no audit, and hence there is no success. So if we look at the topic, the audit documentation or the standards on auditing on which we are discussing, if we look at that, to be a successful professional, eventually not only yourself, your team, consistency of approach, knowledge, not only that in our own eyes it is a good audit, but it should be a good audit in the eyes of the expert auditor, as even SA 230 refers to the terminology. And finally, as we know, that unless there is evidence, there is no audit, and hence there is no success. So coming now with this backdrop, coming to SA 230, and at the outset, there are a few acknowledgements which I would definitely like to share, and I would begin with Chetan Negi, who's a second-year article, and when we talk about this presentation, we have a second-year article who has also contributed in terms of making this presentation, supported by his senior Shubham Tripathi, who's a qualified chartered accountant, and then of course the audit partner Bhavin Kapadia. And I'm thankful to all my colleagues for putting this presentation and the thoughts in a very nice fashion. So my compliments to them as well. So what are we covering? We are looking at the key principles of SA 230. We are saying Why is audit documentation required? What are the work papers to enable independent review? Other key points and observations from regulatory bodies, and some key takeaways is what I have as a part of this presentation. I mean, like this was almost in the 17th century, sometime back in 1753. I mean, like, and they've always, it was obviously with reference to a piece of cloth, but I'm sure this applies to our work as well. A stitch in time saves 9. If we get our audit process, our philosophy, our, what are we aiming to achieve out of our audit, and obviously out of the audit documentation, I'm sure it will reduce the entire efforts even after the audit is closed, because as we know that while you cannot do any more audit, but you have a 60 days post-audit report to put your working papers in place, maybe in some cases do up the cross-matching of the work papers. But if we get it right first time, I'm sure as the audit progresses and as the work is performed, you would be in a position to reduce the anxieties which are left to the last, and maybe as professionals we will be able to handle more than one work simultaneously, because everybody understands the rule of the game. So this is one of my favorite proverbs if I have to ever talk about audit documentation. And while Institute has time and again through various educational material has stressed the aspect, and because many of the professionals have started also taking keen interest in the work on the AQRs which are being released by the National Finance Regulatory Authority. And one of the observations which they have, and which I quote, is that audit file should be capable of speaking for itself without the need for any other aids to interpretation. And I'm reminded in my early days, the senior would come back and say that, please leave the audit file. I don't need you in front of me. I will review the audit file, and I presume that the audit working papers will speak for itself. And I go back almost 40 years in my career, and I'm sure after 40 years, I'm reading even the similar language which is being echoed, that it has to be a self-speaking, self-sufficient piece of document. You don't need a commentator, and which is in this case the auditor or the auditor's team, to explain what has been the nature of your work performed against the benchmark which was set. With this, what are the key principles of SA 230? We are saying that working papers are reflection of the firm's process, and like it's a mirror. If you got it right, your mirror will exactly show what you are. So they are a reflection of the firm's process. It's not the test. It is not to test the memory. While we all believe that we have great memory, we can remember things even after 30-40 years. But the audit working papers are not the test of memory. They are expected to be penned. It is a guide for the new team members. Somewhere in the earlier session, you heard Mr. Joshi speaking about the fact that if there were certain earlier references in your work papers, how does the new team get to know what are the carry forward items? So it's obviously also a guide for the new team members, because they have some role model to follow. It is considered as a backbone of audit, and the minimum retention period is 7 years. As you know that earlier, prior to 2009, it was 10 years, then it was brought down to 7 years. Internationally, ISA 230 is 5 years. But as we speak now, currently post-audit report, or if there has been any revision in work, the period of 7 years begins thereafter. So that is so we are not expected to go by on the income tax retention period or the Companies Act retention period. We have the retention period under SA 230 itself. So what is the scope and objective of this essay? Briefly, it is the auditor's responsibility to prepare audit documentation for an audit of financial statements. While the financial statements are the responsibility of the management and those in charge of the governance, certainly our audit documentation can only be our responsibility, obviously cannot be the responsibility of the client. And therefore there cannot be any caveats around this obligation. The specific documentation requirements of other essays do not limit the application of this essay. And what does it mean? That as we know that of the various other standards, there will be certain additional requirements. So let's say a going concern, it will have its own additional work papers requirement. But that does not mean that it has any limitation on SA 30, or for that matter, if the other standards do not prescribe any specific documentation, that does not mean that there is no documentation at all, because those standards did not require the mother of all standards is your SA 230, and therefore it is important that if there is a specific requirement, you follow those specific requirement in addition to SA 230. Absence of specific requirement, you still have to ensure that your SA 230 will speak around all the topics. And as we come down to the later part on 260, we will find that there have been interpretational issues around the, whether SA 230 is a larger standard, or there is a if that standard did not speak about a particular requirement, did it mean that there was no requirement for documentation? And finally, the laws or regulation may establish additional documentation requirements. So this is how we have to approach the audit documentation. SA 230 primarily. In addition, if there are any other requirements, then according to that essay, if there are any additional laws or regulation which requires, that is in addition. But absence of other two does not mean that your 230 will not have its own requirement. And what is the objective? Why this documentation is that you prepare documentation that provides a sufficient and appropriate record of the basis of the auditor's report. So whatever, as they say that if the movie is released, there is obviously a lot of pre-work which has happened from the script to thinking to whatever. And finally, we are saying that there is a sufficient and appropriate record of the final product which we are seeing, and which is in our case, the auditor's report. And also to satisfy and confirm and provide evidence that the audit was planned, importantly that it was planned and performed in accordance with all the standards of auditing and applicable legal and regulatory requirements. So it is saying that in Hindi sometimes they say aam khao gutlik se kya matlab, but in the standards on auditing, it is you need the mango and you need the seed, because all of them will finally give you the work which you have finally performed. Just it may be good because it's a refresher course. It would be good to just look at the relevant definitions on audit documentation, the record of audit procedures performed, relevant audit evidence obtained, and conclusion the auditors has reached. Broadly, this is the audit documentation, and obviously, how do you document it? So you have the audit file, which may be both in physical or soft or combination of both. One or more folders or other storage media in physical or electronic form containing the records that comprise the audit documentation for a specific engagement. What is an experienced auditor? An individual, whether internal or external to the firm, who has practical audit experience and a reasonable understanding of audit process, standards on auditing and applicable legal and regulatory requirements, the business environment in which the entity operates, and the auditing and financial reporting issues relevant to the entity's industry. And why this is important, that you are not, when the audit documentations are being reviewed, it is expected that it will be reviewed by an experienced auditor who understands all of this. So it is not about somebody who's not a practitioner, somebody who does not understand the entire, is only a pure academician, but somebody who understands every aspect. It's about the process to the framework to the business environment and specific issues, because like banking and financials, your insurance, your manufacturing, your, the blockchain, all of them have their unique challenges and issues around it. And therefore, this experienced auditor, when he or she reviews your file, it is important that it passes through their eyes, because they are also experienced. So just as a diagrammatically, speaking, that why is audit documentation required, and it really doesn't matter whether you use it clockwise or anti-clockwise, because each of these topics are relevant. And we'll start with the top left, which is the enabling accountability for work, assisting in review and supervision of work, retaining records for future audits, because they are also a basis. Apart from the retention period, they are also a basis to help the ongoing and the new team members which will come in. Responsibility on auditors to share data under regulatory framework, because as we know that there are certain under a peer review or under a QRB or under the NEFRA, there will be requirements to share the our work papers, because that is a part of the mandated process. It enables the conduct of a quality control reviews and inspection as per the standards on QC1, which is obviously the rope which ties all the standards on auditing. It facilitates in internal inspections and reviews, and obviously assisting in planning and performing of audit. So, that's why the audit documentation is required. Everybody will have different interest in your audit documentation. So the work papers to enable independent review. And I think, let's look at it that, because every time, whether there is a peer review, and as we know that increasingly there were only level 1, level 2, level 3 kind of professional firms listed and large size companies, which was required. But now your peer review is going to be made mandatory all across, and therefore even increasingly it is going to be important for all practitioners, whether they are small and medium practitioners, for obviously the large, medium to large audit firms, obviously, because they were subject matter of peer review and various other reviews, regularly. Obviously, there is a learning every time a review happens. There is no denial of the fact that whenever there is a review, there is some takeaway home, there is some areas of improvement, there is some process improvement, if I may come back and say. So what does the work papers, why do they enable independent review? So the auditor shall prepare audit documents that is sufficient to enable an experienced auditor having no previous connection with the audit to understand. And this is very important, that if it is an internal, sometimes it is possible they may have some understanding on the audit client. But if there is an external experienced auditor who has no previous connection with the audit, and obviously therefore for them what audit documentation is provided to them is going to be the basis for understanding the nature of work performed and the final work, the report issued. So what does it want to understand? The size, nature, and complexity and extent of the audit procedures performed, or rather which was obviously planned and then performed, outcome of the audit procedures and evidence obtained as a result of the work performed, key audit matters raised, conclusions reached, and professional judgments made to reach to that conclusion. And then finally, the policies and procedures for assembly and archival of work papers within stipulated time. Because if there is a requirement to produce a work paper, and if one is not able to produce the work paper because now the file is not capable of being traced, obviously the inevitable so outcome and the conclusion will be that no audit was performed. So it's not just about your own working papers, but it is also about the traceability within the stipulated time, which is going to be important. So therefore, it's about the various stakeholders in this entire practitioner's office, which is going to ensure that every aspect of the SA 230 on audit documentation and other requirements are met with. So audit files, we saw that the audit files, audit working papers can be, in a physical or in a soft, or it can be in a combination. And so one of the requirement, and there are various software tools, audit tools, which are available. There are a lot of from the Institute for SMP, a lot of soft copy, as I know through the SMP. Earlier they were sharing the CD drives in which the institutes, the Auditing and Assurance Committee, they have done a lot of work around helping the SMP practitioners to manage the documentation. So the use of an audit tool software would certainly facilitate to a great extent. All of us have done audit under the COVID scenario where the offices were shut, people were working remotely, and therefore our own exposure to the ICAI framework has obviously taken up to the new heights. So what do we have? We can have conceptually, as we always knew, that there was a permanent audit file and the current audit files, because permanent audit files are like your referencer. In some cases, it will require updates basis the changes, and the current audit files will be for the audit period under which we are referring to. And therefore, what is important is that it should be a very logical approach, so that one is not going helter-skelter. Any book we read, there is always a method to madness, as we come back and say. There is an index, there is an abbreviation, there is an introduction. There can be after every section there can be some question answers, there can be some contributions made. So there is a method to madness, and therefore you could have the section flaps, which enables the arrangement of papers about the client information, the process related to key areas, including the internal financial controls, the financial ratios and financial statements, including audit reports of last 3 years, secretarial records and agreements. So these are some of the, what we call stable database, so that, you only thereafter replace the changes which are happening. And the current files will obviously have the section flaps, the area-wise checklists, including compliance with the Ind AS or accounting standards, whichever the framework under which the entity is required to prepare its gap, the requirement under the CARO, the Companies Act, and obviously the standards on auditing as well. The sampling size and materiality, the management letters, the letter of representation from management, the review sheets of seniors, including remarks for matter resolved. So there will be, a methodical approach is obviously very helpful when, and therefore what happens is that as you have new team members, they all learn to, be part of a particular process in which the work will always be performed, and therefore you will have consistency and therefore less surprises. What is the extent of audit documentation? Now, obviously, the risk, the judgment, the need of analysis, the conclusions which are less apparent, or the significance of evidence, whatever are the areas. So if there is a, whichever way the bar moves, therefore you will have more documentation, because each one of them will have to satisfy that your judgment, your analysis, your conclusions, whatever are there, if they were less, you have a challenge. And therefore, your audit documentation will have to be appropriate to the size, the scale, the nature of observations, the requirements to produce your final audit report. So including the key manager, the key areas. So it is not really one shoe fits all, while the standards on auditing are designed to cover every aspect of an entity, whether small to large, and for a single practitioner to a multidisciplinary or a very large frame. So as you know that the standards of auditing, because they are principle based, they're all pervasive. And some of the other key points are that as per SQC1, obviously the audit documentation is the property of the auditor. The group auditor can ask the component auditor for the audit documentation of the component entity for satisfy, because they are eventually consolidating our work into their consolidated accounts. And it is important for us to know that the SA 230 does not only deal with the statutory audit, but it also will apply to your tax audit engagements or transfer pricing engagements. Will also have to follow the principles laid down by SA 230. Just from to understand about the the number of observations which the QRB had conducted, and for the financial year 2021 they had conducted the reviews, and these are the various standards in which they found the number of observations. Obviously SQC1, which is also the mother, as I would say, there were 36 observations, and the second largest was SA 230. So you can imagine that the amount of efforts which all of us as practitioners needs to put in to ensure that the number of observations in relation to audit documentation is to its minimal. Zero is always preferred, but nonetheless, we are saying that let it be at least minimalistic and let it not be, standing such tall. We must stand tall in our quality of work, and certainly not stand tall when it comes to deficiency of our work. And this would be certainly my message to all the participants who are listening to this evening presentation. Some of the illustrative observations of QRB and NAFRA, I'm trying to bucket them in certain short forms. So obviously, what were some of the observations? So there was inadequate work paper for experienced auditor to understand the audit procedures followed. So they were also grappling with what to look for, where to look for, what is it that you have done, what is it that you have observed, what is it that you have concluded. So they have found that there were inadequate work papers around the audit procedures followed. The work papers were not linked to any account balance. Now again, the same thing, that if I have a audit balance confirmation, and in a balance confirmation I have for a party, there is a subledger listing I have, which has got a certain subledger code number, there is a balance, there is a confirmation, there is a reconciliation. Now, if I'm not able to cross-check, where do I look for that confirmation with reference to reconciliation to that master list of the balances outstanding of the sundry debtors or creditors, whichever confirmation we are talking about? Unless I'm able to do that, how do I search? I don't have indefinite time to look for those papers. Then of course the control sheet and checklist were missing in the file. So maybe we are saying it was there, but the absence of that, the golden principle is work not performed. No bifurcation, and therefore you will see that the SA 230 also has post-audit report 60 days guidelines, just so that your housekeeping of all these linkages and everything happens in case those who have not done it while the audit was under progress, or it was not capable, or maybe there were more than one revision, because documentation standards don't require you to maintain 100% of the papers from day one till the closure, because there are certain papers which are in its draft stage, which are getting fine-tuned in terms of as the audit is progressing. So one did not thereafter save the earlier papers because that is already updated with the most current paperwork. It is not that you are creating this paper after the audit is over. It is just that you had more than multiple version, and the SA 230 is clear. They don't expect you to maintain all the versions of your working papers. There was no bifurcation of records provided by the client and generated or prepared by the auditor, because there are certain analyses which are done, which are obviously your, the reviews are happening both ways in terms of the analyticals as well as substantive checkings. And if there are analytical papers and those ratios have been created by the audit team, it better show that it was your analysis rather than given to you by the management and you have simply filed all those ratios as a part of your work papers. So that is also another set of observation which was done by the QRB and the NAFRA. Obviously, the inventory physical verifications, papers and outcomes were not filed, as we know that there were certain specific relaxations and the workarounds during the COVID time, that where the physical checkings were not available, then there were alternative procedures which are required to be performed, and those alternative procedures. So assuming that you did a walkthrough, a video, and that video was recorded. Now, if you have not kept that video as a part of your work paper and it is lying in your mobile somewhere, certainly work is not performed. And that's a degree of efforts which will have to be put in by every team member, whether they are your junior most article to the signing partner. Everybody has a role to play in this aspect. And then the certain sections of the balance sheets were blank, like investments, while it was still there as a part of a valid numbers were there, but for some strange reason they have observed that they were missing. Now, certainly, it does not augur well for the profession. It does not augur well. It does not give a comfort to the experienced auditors when they see some basic level errors creeping in, because then it only shows that we are not wanting to be as careful, or rather, if I was to go back to my opening sentence, we don't want to be successful. Now, if we don't want to be successful, I don't think anybody can help us. We can only help ourselves. Obviously, as we know that the AQMM, and after the April 2023, it is going to be also a mandatory, because there are going to be classifications, and therefore, if we want to be in that league of what we call our good auditors, then obviously AQMM has its own score, and therefore there are going to be mandatory requirements. And AQMM also has suggested to have standard format for the documentation of ongoing audit that must include the below, in addition to whatever other standards are coming back and saying business understanding is also already covered by the SA. The audit sampling is also covered by the SA. The materiality determined is also there. The substantive analytical procedures are also there, and the control evaluation is also there. But because the fact is that so far there may be audit practitioners who may have not followed a standard practice, but may have had every documentation. So it is possible that it is not arranged alphabetically or in a certain fashion, because that's not how the internal audit programs, the processes were designed. But now with AQMM, it is expected that there will be a standard format, because there are marks for the standardization, and that is what the AQMM is also wanting to achieve. So I would urge that this is another aspect which we must review. One another aspect which I would like to urge at this point of time is that, as we know, that the social stock exchange guidelines have already been issued by the SEBI, and in India over 30 lakh NPOs are there. and I'm not talking about those which are not eligible to be registered, onto the social stock exchange, because all those who get dependency on corporate funding or by the group companies, they are not the eligible entity under this the social exchange. But what it will do is that either when you are doing the as a statutory auditor, or you are carrying out the impact assessment, where the two requirements laid down by SEBI would be, one, that you should be a member of the chartered accountant, and two, you should have passed a certification from the National Institute of Security Management. Each of those work, the NPO so far would always knew that you have to prepare your Form 10B, you have to prepare your Form 9C, you have to give your, the balance sheet according to the Bombay Public Trust Act, and therefore most of the time the audit would have got done. But now, if your client happens to be an NPO who's willing to raise money onto the social exchange, and these are all paid assignments, because they are raising money from the stock exchange. You may have the outcome-based funder, or you may have a risk-based funder, and all of them will pay fees because it is their money wants to be put to good use, and therefore they also require good set of auditors. And unless we got our SA 230 right, and which will mean that the rest of the other assets will also have to be equally be catered, maybe this whole opportunity around the social stock exchange may be, not be within your arms. So what are some of the key takeaways for raising the quality bar? Training the personnel on the audit documentation standard. In my case, let's say if my second year article, who's helped prepare this, I'm sure he has to read through more than one. He may have read it in the initial year, but even for this, he would have to read through every possible paragraph to see what is the crux of the entire essay which he wants to bring around. The policy of doing audit and documentation simultaneously, because this is as they say that as you score, you have a scorekeeper who's updating the scorecard. Now, in that case, there is somebody who's a player and there is somebody else who's preparing the scorecard. In our case, it is we who are performing the work, and it is we who are supposed to be documenting. Nobody else is going to be able to document our work. And therefore, it is important that not only should you have the policy, but you should also have a training that how do you manage both this aspect simultaneously. Because at the end of the day, we feel so tired having performed the work, having had discussions, having chasing clients for some paper, that we then come back and say that, oh, documentation, I will put it to another date, and the another day never comes. Follow-ups of documentation matter during internal reviews. That's the part, because eventually, whatever you have observed, it has to be brought to its logical conclusion, because eventually that is going to be reflected in your audit report. If there is a deficiency, if there are internal control deficiencies, then if there are going to be modified reports, each one of them will have to be only as a reason of your observations, communications, and then eventual, the conclusion drawn, and then how it is getting reflected in your audit report. And for all this, you will require obviously a follow-up of documentation matter using a standard format to ensure proper documentation. Both, I have shared this earlier, checklist for each area covered in audit engagement, and repository of scanned and digitally signed financial sets, so that today storage of is not very expensive, because the data storage, obviously the cost have come down significantly. The with 4G and 5G, your capability to reach out to the documentation on cloud or on your remote management is possible, and therefore each of these documents, if they are easily available, the work will get performed that much faster and not at a later date. In terms of finally, what can I say? That if it's not documented, it's not done. Document now, save time later. If we want to be happy, successful, we don't want to pull our hair. I'm sure this is the, if I may say, the mantra for a successful and a happy auditor. And with this, I would like to conclude my section on the 230 with this final observations that the consequences of non-compliance of standards, particularly on 230, the failure to exercise due diligence or gross negligence in the conduct of his practice shall be considered guilty of misconduct mentioned under clause 7, part 1 of the second schedule to the CA Act 1949. So it is important for, because, there is always a carrot and a stick. If we study hard because we want to pass our CA examination, and if we want to pass as an auditor, we will have to also know that apart from the good work and happy and satisfied auditor, failure to do that also has its own implication. The requirement of section of the essay plays a significant role in determining what constitutes due diligence. The auditor is entirely responsible for the essay requirements. A strict liability approach has been implemented. It is for us to know failure to act in accordance with the essay, and particularly the unconditionally necessary obligation part thereafter, would constitute both failure to exercise due diligence and, depending upon the circumstances, gross negligence. So compliances with the essays, however, continues to be the benchmark. So, in every disciplinary action, if it is being taken, if you don't follow this standard, there can be failure to exercise due diligence, because as we say that if you have performed work and those work is not properly documented or is not available, it obviously would mean that you have failed in your due diligence, and therefore it may also in some cases lead to gross negligence. And therefore we know that the gross negligence has its its own strict penalties, and none of us wishes to be in that zone. So and that was the word of caution on essay 30, why essay 30 was equally important, as a bedrock for the entire quality of your work done. With this, let's look at the essay 260 and essay 265. And the reason why both of them are combined, because both of them are, communication to those charged with governance, and obviously in some cases the management. So what are we covering? We are looking at the key principles. We are looking at the qualitative aspect communicated to those charged with governance. And then we look, some of the case studies is what we are trying to look for. Barking up the wrong tree. Now, we heard this terminology, those charged with governance. Now, there is a subtle distinction between management and those charged with governance. It is possible that those who are charged with governance can be in management, but the vice versa need not be true. Only because I am in management does not mean that I am in charge of the governance, because the definition, as we will see under the essay 260, it is important that we have the right names to whom we are communicating if it is to do with governance. And therefore, when I'm saying that we are barking up the wrong tree, because if you are talking to a wrong set of individual, you think that you are, trying to communicate, you are trying to influence, you are trying to sensitize, you are trying to, tell them that, look, this is what you are supposed to do. But if they are not in charge of governance, then obviously what you are, and thereafter when we are trying to look for the compliance, that whether have we complied with essay 260 and 265, you will find that you are barking up the wrong tree, and therefore you are not only wasting your time, energy and efforts, and obviously losing your voice and giving yourself a kind of a sleepless night. But more importantly than everything else is that you have failed to comply with the requirement of SA 260 and 265, and that is the crux of the proverb which I'm trying to use. Again, looking at the key principles applying in an audit of a financial statements. So what are we saying? That both these standards are looking at timely and formal communication, looking at communication with third parties, and because in some cases it is possible that you may have a CAG, in some cases you may have a set of lawyers, in some cases you may have a banker or other consultants. So that could be subject to the guidelines around the confidentiality, of course, is there, but those are also being dealt with in these standards. It can be a declaration about the compliance with ethical standards, as we know that the standard specifically has a requirement that if you are doing an audit of a listed entity, you have to make a declaration to the audit committee that as to how you are independent, and in case there are non-audit services, how have you reduced your threat to an acceptable level. So those are again mandatory requirements. It's not assumed, but it has to be a part of the communication. It has to be a documentation in the audit work papers. Identification of the key matters to be discussed, because what you want to discuss, you are not discussing 100% of the observation. It has to be important and it has to be significant, and maybe individually it may not be significant, but in combination it will be significant. So therefore, how do you look at the key or matters to be discussed is itself a big skill and a knowledge and experience, and therefore how else can we teach our juniors unless we know how to make this précis out of the various observations we have. And then finally, two-way communication. Always remember that under SA 260 and 265, as they say that the two-way radio, which is your walkie-talkie, is a two-way. Otherwise, it was always supposed to be only mic. In mic, it's a monologue. You are talking, nobody, you think others are listening, but like I'm sure at this particular point of time, I'm speaking through a digital platform. I don't have the members in front of me, so I'm not sure whether everybody is listening or not, but I presume that everybody is listening because I can't get a feedback from my participants. So if you are listening, of course, you could, maybe like you are putting your membership number, some of you all can put your thumbs up, so I know that I'm not talking only to myself. So that's the two-way communication. So what is dealing with those in charge of governance, and what does the key the key philosophy is that who are they? They are an individual or more than one. So if it was going to be an audit of only a proprietary company, then obviously he's in charge of governance and he's in charge of management. And of course, we have our own essays around the skepticism, because the maker and checker is the same person. How do you still handle it? And therefore, it can be one individual or it can be set of individuals who are responsible for overseeing the strategic direction and obligations related to accountability of the entity. We have to determine the appropriate persons within the entity's governance structure with whom to communicate. And this is obviously as a result of understanding the governance structures, understanding the organizational setup, and the people to whom the governance is specifically interested with, and all those who would like to specifically look at para 11 deals with this. Then, having understood what is important is to document the names of the SA of the appropriate persons, and therefore you go back to SA 230. So while there may not be a specific requirement under 265, but nonetheless you go back to SA 30, because how else can you say that I did not bark the wrong tree? And therefore, having identified, you document it. And then one of the aspects, as we said in the initial part of SA 230, that you don't need an individual auditor to be in the room to explain the work because the documents will speak for it. Similarly, if there has been a communication which is done orally, eventually it will have to be converted into a minutes by way of a document to say that what were the minutes, when did it happen, in which office did it happen, who were the people who were participating, what are the method, what are the points which are discussed, what was the outcome of that meeting, what was the follow-up out of that meeting thereafter. And so therefore, only to say that, look, these were the issues and I communicated orally, but I did not have a document to prove that this was eventually communicated by way of minutes of the meeting, we have a challenge. Again, what are the qualitative aspects which are communicated to those charged with governance? They may be related to the accounting policies, the initial selection or change in the significant accounting policies, because one of the aspects is that you are not blindly following the accounting policy which has been selected, because there can be more than one alternative. It has to be suitable for the nature of the entity's operations and size, and therefore, there can be a dialogue around the selection of the accounting policy, because some of them can have a different outcome to the policy which has been selected. And it can be unique to industry because there are certain characteristics of, like in a retail industry, right to return is a known factor, right? And therefore you will have a lot of policies and procedures around revenue recognition, the estimations, the realizable value if it comes back to you. So there will be a lot of implications around such aspect. It can be around accounting estimates, and as we know that the accounting estimates can change the in a lot of industries. If you are an auditor of a real estate development company, you will understand it is full of accounting estimates, because your sale price to your cost of constructions, to the variability in the material, to the regulatory framework, to the speed with which it is happening, to the in many cases sometimes the environmental pollution, sometimes the part by part OCs which you get. So you can have multiple inputs, because your whole whether your carrying cost will be capable of being realized or not, from that to cost of construction to realization, is full of estimates, and therefore it is obviously fraught with uncertainty. And then obviously you look at actuals versus estimates to understand that whether is it underboard, whether is it overboard, or is it a fair play. Because eventually accounting estimate is not about just numerical numbers, it is not mathematics. It is the very fact why it is called estimate is because there is a lot of variables, factors which are in it. And therefore, those are the items which are, qualitative aspects which will be discussed with those in charge with governance. There will be issues about the disclosure in financial statements, about the contingent liabilities, subsequent events, related party disclosures, so many. I mean, like you had Shriniwas Joshi, who spoke about the contingent liabilities in his earlier presentation as to that how do you know that there is a contingent liability. I mean, like you will follow a process, you will look at the legal lawyer bills, you will ask internal questions, you will look for the minutes of the meeting, you will do some conversation, but eventually if there is a contingent liability brewing somewhere, how will you know? And therefore it is important that you get to the various methodological process and satisfy that the appropriate, whether it is AS 29 or AS 37 disclosures are made. And obviously the related matters, which can be non-recurring items, there can be some unusual transactions. So we obviously, COVID were the 2 years where there were, a lot of unusual transactions. One cannot live in the shadow of COVID for all the years to come. But there are obviously certain specific scenarios, but it can also be other than COVID. So those are some of the qualitative aspects. So let's quickly look at some of the facts, some of the case studies. So let's say CA Mr. A has been appointed as an auditor of Jin Limited and a multinational company dealing in spare parts. During the course of the audit, the CA faced the issues in obtaining the audit information from the management, which resulted in delay in closing the audit of financial statement. CA, Mr. A was informed that such delay is due to system issues in generating the information from the ERP. I mean, like many of us may be familiar that mother of all excuses is accounting packages. Either, it is giving you some junk, or it is not configured to give you this information, or, the IT person is not available to give you a specific report. So there can be more than one reasons. And alternative procedures were applied for concluding the audit areas because he could not have waited for long. And how did he address it? The CA reported the matter to those charged with governance about significant delay in receiving the information, which resulted into delayed audit closing. Further, the auditors communicated the need for improvement in ERP for extracting the information on a timely basis. Now, all these are matters which has to be timely communicated and not as a part after we have burnt our midnight oil, done everything, and on the last day we go back and tell those in charge of governance that look, we burnt our midnight oil to produce the work, but we had so many hurdles which came our way. The SA 260 and 265, this is not about 265, but 260 definitely expects the timely communication so that the corrective measures can be taken by those in charge of the governance and in charge of the management. While you may be talking to the management to give you the information, but it is also equally important that those in charge of governance is also made known. You could have a situation where the auditor raised the point on changes in accounting estimates, the provision for sales discounts based on the scheme. As we know that there can be various schemes which are on an achievement basis, whose cycle may be other than your reporting period. You can have a cycle for sales incentive where the turnover achievement can be for a calendar year, and you are doing the reporting for a financial year, which is April to March. So obviously there is going to be a cutoff between the one quarter, which is going in the previous, and one which is going in the subsequent. And you don't know what is going to be the next year's policy. Therefore, there are obviously significant variance between the estimate and the actual amount. The matter was raised repeatedly with the management and those in charge of the governance. This issue was considered as a key audit matter to be reported in the audit report as per SA1 and communicated to management. The audit procedures were accordingly scheduled. So what is important is that this is not about that, you complete your work and then only those in charge of governance see your KMP draft for the first time. Then they're obviously going to ask this question that why was there no communication while your audit work was getting performed, because it was such an important aspect for y'all to be brought it as a part of your camp. And therefore, what I'm trying to stress upon is that these are not 2-minute noodles where you boil it and your food is ready, because there is a process which has to be told, because it is the corrective actions has to be taken by those in charge of the governance as well. And sometimes it is possible that some of the items may have not got resolved and therefore may have been part of your earlier year's report. And if they continue to be there in your second report, obviously it has its own red flag, because that means our work, which we think is significant, which is important, which we are highlighting, and those in charge of governance are not taking an action, and therefore it may have its own consequences on our work performed, because therefore it is not being treated seriously, and therefore it will have to be dealt on a different footing. Another aspect is, let's say today, course of audit, there were certain weaknesses observed in the internal controls in releasing the monthly payment to the contract workers and compliances with the labor laws. Maybe the PF, ESI, Contract Labor Regulations Act, maybe the number of workers for which the employer had taken the permission versus the number of employees for which the contract labor himself was required to also take permission, because as principal contractors, because we employ more than one set of contractors, we have our own registrations to be done, and each of the contract labor contractors will have their own follow-up to be done as under the Contract Labor Regulations Act. The attendance data was not captured in a systematic manner, and statutory compliances for such contract workers were not tracked. So you can see the implication that you don't know how many came in, you don't know what was the compliances to be done, you don't know whether the PF, the ESI, the registration, the attendance, the nature of work. You found more than one weakness in the internal control in processing the contractors' bills, and therefore, if they were highlighted to the management and charged with governance, and based on the audit observations were assigned this as a special area for detailed review and compliances. So, during the course of the audit, the internal auditors therefore were given to strengthen the work so that finally the level of work and the documentation provided by the management and recorded by you as a part of your work papers as a resolution to your observation was satisfactory, and therefore one can come back and say that whether eventually if it was resolved satisfactorily, it may not find as a part of your audit report, but in some cases it is possible that it can appear as a part of your IFC as well, because if it was a continuing challenge. So as we see that, it is so important to keep this dialogue on, and also it is important for us to know. I may come back. I'll take that as at this point of time, that when you communicate, let's say, one significant matter, that does not mean that that's the only significant matter. It is not about a Dodi list. What you are communicating is out of various things what you think are important aspects, and therefore those in charge of governance, and that is again a part of the this standards about the orientation for those in charge with governance. They cannot come back and say, oh, you only communicated one part, which means that everything else was hunky-dory and we had nothing to worry about. It's not about, they cannot have a judgment in reverse that you only, and therefore for those who are wanting to read essay 260, your A31 is an essentially a very, very nice tool in the hands of the auditors to come back and say that if I've communicated one or two, that does not mean that then there is nothing else for me to communicate, or therefore everything else is okay. I have communicated only things which are important. If you, as those in charge of governance, are interested in knowing something beyond that, you have to ask us that as a question. And therefore, it is so important for us as practitioners and our team to have read through this entire standard carefully. They are not very lengthy standards, but they're powerful standards. Each sentence used in this has got very, very deep-rooted meaning, and every full stop and commas have to be read carefully. This was a case where, as per the group policy, the data backup of server was maintained in the parent host country because the holding company was outside India. The required extracts or data dump was being maintained by the subsidiary company in India to comply with the regulatory requirement. Now, as we know that even under the Companies Act, the data for the Indian entity has to be maintained. Now, whether this extract will comply with the definition of the books of accounts or not, whether the aspect of how the maker checker or the approver concept has worked, because if you only have the data dump, you may not really have been able to demonstrate the internal control which is built into the system. But nonetheless, those are all connected matters. So how was it addressed? The matter was communicated to management to reconsider the existing practice followed for maintaining the backup of data server outside India. The company took the legal view to support the practice followed and shared with the auditor. Now, this can also be a kind of, as we say, using the work of an expert because whether this extracts and data dumps will comply with the requirement of the Companies Act or not is a matter of a legal view, interpretation, right? And therefore, how did your observation eventually get concluded with the support is what I'm trying to highlight. And therefore, this is what we call as a two-way communication. You saw something, you benchmarked it to something, you communicated to those charged in governance, they took the action, they gave you something, and you closed the audit observation. Finally, as we say, that if it is important, it should be communicated to those charged with governance. Of course, as I have said, that the people sitting in this 4 sofas are correctly, those in charge with governance and are not the other people where, this communication will only become like a communication to people in management and not to those charged with governance. With this, I have finished my, the presentation within the time allotted to me, and thank you so much for patient listening. Happy if there are some questions. Otherwise, I would expect the moderator or the person in charge of the session to take over from me, please. Thank you so much. Amish, over to you, please. Amish, over to you, please. You are on mute. Vaibhav or somebody, can somebody take over, please? Vaibhav, Bharat or Dharmesh? I think Amish's bandwidth is low.
Hello,
Hi. Hi.
you're audible?
Yes, please.
Actually, network issue is there.
So over to you, Amish.
Okay, fine. Renuka madam is there? 1 minute, sir. No, she is not. Okay, fine, sir. I will conclude the session. I am audible, sir?
Yes, please. Yes.
Okay. The sir has taken today's topic and explained in detail the audit documentation. So on behalf of WRC, I request all of you to give the vote out of thanks. Thank you, sir.
Thank you. Thank you.
Mishra ji. Actually, so we can close the session now, right now.
Thank you.
Anyone, any query can unmute themselves and answer the sir or ask the sir if any query is there. Fine, sir. We can close now then.
All right.
Thank you, sir.
Thank you.